Good afternoon, everybody. It's great to be back here with you. Mike Fairborn here for our swing trading class. And folks, today I want to really talk about a simple three-step approach to swing trading, which will involve the trend and a few other details. And so really looking forward to diving into that with you today. I am joined in the chat by a good friend and colleague of mine and my manager, Scott Thompson. So welcome to you, Scott. Everybody say hello to Scott. It's great to have him on board. Folks, any questions, comments you have, definitely throw those into the chat so we can address those for you. But plenty of information here to address and kind of a way to line up swing trading for many of you that are new to the swing trading concept. So we'll go through the steps involved. We'll show you what swing trading is, and then we'll do some live paper money examples here as well as we go into that. But I would love to say hello to each of you. Hello to you, Josh, Will, Robert, many others here, S. Val, as well as Murray members, some new folks I hadn't seen before, folks. But we'll be taking a look at this swing trading here right now after these disclosures. So let's dive into that first so we can get going. All right. This material is intended for general information purposes only. Now, the paper money software application is provided for educational purposes only as well. Investing does involve risks, including for some products and strategies, more than the loss of your initial investment. Important thing to note. There is no guarantee that the execution of a stop order will be at or near the stop price. And wanted to note that past performance is no guarantee of future results. And a quick note too, dividends are not guaranteed. Okay, we also like to look at the futures in this class from time to time, the futures charts, that is. And so only for futures charts, we do have a futures trading class with Ben Watson. That's on a Tuesday mornings, but just a quick note here. This is just for the charts themselves. Futures and futures options trading does involve substantial risk. It is not suitable for all investors. So some additional disclosure slides listed there as well. All right, well, what I want to do initially here is to get everybody just kind of on the same page because many of you are new to swing trading. What I wanted to do was highlight just some of the basics, and so you understood the concept of swing trading. We've got this first slide here to kind of highlight what we're after within swing trading. And so what I'm going to do is just point this out directly on the chart here, just to note a few things. Now, there is the bullish side, there's the bearish side, but whatever it is, whatever side we're on, we're looking at that longer term trend, or what we define as the trend being up. And we're trying to take, let's say if we did have a 50 period moving average or a 20 period moving average, prices are above it. And what we'll oftentimes see with this are higher highs and higher lows on the trend itself. Now, those are some of the steps we're actually going to go through here, but just to kind of highlight what we've got as we look at this, you'll notice over here on the left-hand side, yeah, so it's bullish. In this particular case, we can see, yeah, from the left-hand side of the chart to the right-hand side, prices are in fact going higher. A key thing to note, the trend is up. Now, it is a shorter-term time frame, as it states here, days to weeks to form. A lot of traders are looking for maybe 3 to 15 days. Now, I've seen traders go all the way up, and they do call it swing trading, up to like 20 days. And so that would be like weeks, and that would be like maybe up to a 1 month time frame. Some will go that far, but generally it's in this range, and maybe even sometimes even closer to the middle of this range, the 3 to 15 days. So just to highlight what we've got here, we are looking for those ranges within a trend that is directional, where we think that there might be a substantial move setting up. Okay, like over here. And that's what you're seeing over here in this particular scenario here. A little bit of a pullback. And here is the move to the upside. This is really what swing traders are looking for. They're not looking so much for a move up and a consolidation and these little moves. They're looking for the bigger moves on the chart that really constitute really kind of the bigger range in that upward move. Over here to highlight this specifically, as you can see, we've got a strong move to the upside, and this forms like a bull flag. In fact, we have that denoted at the top, a bull flag. A bull flag is just seen as a strong upward move, followed by a very mild consolidation relative to the upward move, and then you're getting this follow through to the upside, as you can see right over here. Do you see that? So this follow through, and really the timing mechanisms that a lot of traders are focused in on come right here. They're trying to buy on the low end of that flag pattern. As prices are coming down, they're trying to get some indications of, hey, that move that we're seeing here is just starting to get underway, or at least that's the expectation. And just a final quick note, you'll notice over here, this is so great with these price patterns, is that when you get a move to the upside like a bull flag, we basically just take this price, and you're going to see some live examples here in just a second. But this move in price that you can see over here on the chart, these candlesticks, they did go up. They consolidated at a much lower pace, right? With that too, let me just highlight this because we go into these details. If you'll stick with us in swing trading in the next few weeks, you'll also see that we do incorporate volume. A lot of times you tend to get stronger volume when the buying comes in and lighter volume to the downside before volume begins to inch back up again. The key note that I wanted to highlight, this price action right here, okay? You take this same price range, like from here to here, and you put it at the bottom, and then you measure it to the upside, and that is referred to as a bull flag target up top. The bull flag targets are really helpful for us to try to capture basically that swing trade move. So there's a lot of information in here. I'm going to go through this. I really wanted to just break it down into 3 simple steps. Quick note too, though, like I said, just to get us all on the same page, for those of you that are not familiar with swing trading, wanted to show you this, but also to the downside. And you'll notice we have a bear flag right here. You see the bear flag coming down? Notice one key thing, because some traders will say, Mike, how do you know it's a bull flag versus a bear flag? Because they see this portion right here and they say, well, that looks a lot like a bull flag to me. Let me highlight that. Maybe this portion right here. They'll say, that's a bull flag, but why did it go down? Well, one of the key things is the trend, folks. Just like we looked previously, what did we see? Left-hand side to right-hand side, prices were doing what? Very easy to see, right? They were going higher. From the left side to the right side, the trend is up. How do you get from the left-hand side to the right-hand side higher? You get a series of higher highs. And by the way, you're going to have to get higher lows to get up there, right? It just stands to reason. They have to be smaller, and your moves to the upside have to be bigger to get it to go to the upside. So this really helps to distinguish between a bear flag and a bull flag. But you can still get the swing trades regardless coming down. See what I'm saying? The 3 to 15 day move that we're talking about here, and up to 20 sometimes by some traders, but really kind of in this range is oftentimes in the middle, right there, parallel or in line with this. And actually that extends a little bit lower down here as far as a target. Okay, well, we wanted to hit that first because it's imperative that we all get on the same page so you know exactly what we look for when we are in fact swing trading. So let's just do this right now as a quick review of the markets before we dive into a specific simplified 3-step approach that will help you spot those swing type trade setups as they're out there. Okay, so first off, here is the S&P 500. We have had a lot of volatility, haven't we? Look at this move to the upside. I mean, it was a strong move, powered by a lot of AI, innovation and productivity from AI. But we came down here and kind of, you'd have to say, sort of a huge move. In fact, I was looking at the NDX and I don't think we're quite down 1,000 now. I'm going to look right now, only 390. So we were in the 1,200 range earlier today in terms of a dip, and it was actually quite substantial. It was nice to see for the bulls. I'll just say this for the bulls, to see us kind of maybe come back and hold near that support level, because when you get sort of a bigger day like this, and some traders will call it a capitulative day, where you get a lot of selling pressure and then the buying power comes back, buying pressure comes back, sometimes you might bounce off that support. You really only kind of know this when you begin to trade above maybe this short-term range. This is also called a close above the high of the low day. You get a lot of volume here, and you'll see that. Now, there is an ETF for this. We don't go into ETFs in this class, but what we can take a look at is, for example, look at this, NQ, the futures. Just as a quick note, We will get volume. And where's my volume? My volume, I thought she it was going to be there for us. Let me just quickly add that in by clicking on the wheel. There we go. Just put in the subgraph and you can see that volume. Do you see this big volume coming in here? Sometimes that will create enough, sellers that, just kind of some of the weak holders in the market might have gotten out and it may be possibly ready for a bounce up, which could be very interesting because this is the NASDAQ 100. You'll see the same or a similar thing as it stands right now. The markets aren't closed, but just to highlight, when you see markets that are able to bounce back, this is also referred to as kind of a doji where you're getting um, sort of a range in here where there's sort of a battle between the bulls and the bears. Bulls on the upside, bears to the downside. And if you can hold maybe near a support level, sometimes, not every time, nothing's 100% in the market, but you might be positioning yourself for the possibility of a bounce. And what does that mean? Look at this. It looks similar to kind of a bull flag if you guys just see it, what I'm talking about right now. So something like this in the S&P 500, and I wanted to really use this in the futures to kind of highlight that volume. It was big. It doesn't mean it's going to stop here, but if it starts to show some strength, well, some traders would call that a positive, if there's some follow through here. Right now, it might be too early to tell, but interesting at this point. Okay, so getting back to our examples now and jumping into a simple three-step swing trading strategy approach. Okay, so I wanted to do this first, and I'm going to actually start highlighting this. Let's use the S&P 500 first. We want to make sure, because we're trying to identify those bullish price patterns that we had just looked at previously on that slide, just right over here. That was the bears. We're looking at bullish because there's maybe a reflection of bullishness in the market too that might follow through. But we want to see if the market is holding above, let's say, an intermediate to short-term moving average. And there are a few that we could look at. So kind of as like a step one, is the trend up? How are we doing relative to some of these longer term moving averages? Now, a really long term is the 200. We're going to be, I'll just highlight these. I'll plug them in right now and we'll look at each one of these. I'm just going to make sure the show plots on these. I'm going to turn this guy into a different color, maybe a green, because I've got another one that's similar. Okay, so you got the 200 day, the 100 day that are averaging 200-day prices. The prior 200 day, the 100 day, are we above the averages? Even though it's kind of obvious that we might be already just looking at the chart, where are we now? We are above. We're above each of these. And you can see up top here, I've got the 100, the 200, and I've got half of the 100, which is the 50. So one of the key things is just seeing that market posture. Is the trend up? It is up on the S&P 500. You can see it right there. Let's now dive in. Once you can see this and say, well, it's performing above the averages, meaning that the trend is up, or at least giving us a solid indication of that. But that's still not enough. We're going to add to this right now. In fact, if I choose a stock now, as we get into the stock portion of this, here's a company here that is Delta Airlines. It is above this moving average. Now you can see from the left-hand side of the screen, I've got a 1-year chart up. It's a little bit longer than our example slide chart that we had. But over here, left-hand side to right-hand side, folks, we are higher, and we did that because of higher highs and higher lows. Now, there's also other technical indications that you'll learn in this class and other classes that we teach. We've got some great coaches to help us here. But look at this over here. We just broke above a longer term. Oh, didn't mean to do that. A longer term, draw that real quick again. A longer term range, which can also help to identify strength. Because why is that? Well, we are in fact breaking higher, are we not? That's how we get higher, is we get above that level. And we saw some strength. In fact, if we were to really zoom in on this right now, let me show you a couple things. Let's zoom in over here. And I'll highlight this. Even look at this. Ooh, we'll go real deep. And I've got a couple of different indicators in there too. But just to sort of highlight a few things, you'll notice that we did get that move coming up. And we have seen that consolidation. Now, we did know that there was a lot of crazy movement in the market today. But this particular company has actually been responding quite well, even given the additional volatility in the market. And you can see us coming up here. Now, we talked about step one, being above some of these longer term moving averages. And I'm just going to pick on one right now. I'm going to take out these longer two right here, the 100 and the 200. Stick to the 50. Which is kind of a shorter term to intermediate term. Now, last week I looked at a 20 period moving average too. A lot of times these stronger tech stocks might, you might get some insight with the 20. More recently, though, a lot with the 50 moving averages. And are we above it? Letting us know that trend. Now, for the second step, once we've got this one underway and we've identified, yeah, hey, it's up, the moving average helps us to confirm that. The next thing is you want to make sure that you are getting a higher high and a higher low. So I kind of said the second step actually has a couple of different steps within it. But this is what you're going to get good at down the road if you look at a lot of these swing trades. And we'll go through them every week in this class, several of them. But simply put, were we making, I'll even zoom in a little bit and then kind of position this. Let's do this. There we go. Perfect. Okay, were we making a higher high from the last high? Indeed, we were. How about a higher low? Right here to here. Do you see it? So let me just connect these so they're very clear. Higher high, higher low. We think it's a higher low. Does it have to be a higher low? It's confirmed as a higher low, actually, and only when we break above this high right here. That's where we get confirmation. We don't have that confirmation yet, but as traders, we like to try to get an expectation that it might be ready to move with the trend. In other words, this higher high and higher low is helping us, and you'll also start to see that higher high and higher low is coming back to that same bull flag type setup. And all we're trying to do is increase the expectations here for that follow through of prices to move to the upside. That's what we're doing. We're just collecting those expectations and saying trend up, higher high and higher low above the moving average. Remember that the 50 DMA or whatever we're using. You can look at the 20 as well, but the 50 a little bit longer term, and that would be, definitely, could be suitable too for that short to intermediate term. But above that, are we adding a few things in here? Step one can help us with that. Step two can help us build that expectation because it's also in a position to form that bull flag. Okay. Now I'm going to highlight this because you say, well, maybe, hey, you know what? Hey, Mike, if you lost your mind, maybe if you're above the 50 period moving average, you're always going to get a higher high and a higher low. That's not always the case, unfortunately. In fact, if you get a strong price move like this kind of is here, you know what you can get? Look at this. You see this is a higher high, but what if we had this? What if prices came up and then they broke down right here? They came up a little bit and then they broke down and they came up and they broke down. And here our 50 period moving average, we're still above it. See how that doesn't qualify for step two? We've actually got lower lows and lower highs. And let me just highlight this in blue just to be extra clear. Lower low. There's a lower high. Do you see them? Look at this. If this were to unfold, here, I'll just take it off so you can see. So if this were to unfold this way, I'll even connect the dots here for us. Is that a lower high from here? It is. It would be. Just in the blue line here. If it came down here, is that a lower low? Yes. And that could all still happen as we are above the 50 period moving average. So we have to be a little bit more granular here. We have to kind of zoom in that microscope, so to speak, and just make sure that we're setting up because really the strongest moves that a lot of traders will say they'd like to look for is not that, but something like this potential to kind of move up outside of the range. Okay. And so, like, for example, even over here, delta move coming up here. We came down, we actually bounced off that 50 period moving average. Interestingly enough, we bounced again. Are we above it? Yes. And we were getting a higher high and a higher low here. A little bit of a touch, got another higher low, and we rallied. This is something called a triangle pattern, or very similar to a triangle. Uh, Similar highs, higher lows, but in this case, we are just focused in on the bull flag pattern. Step three, and this is where we're coming in. So that's step two. You got one above the trend, higher highs and higher lows, to really distinguish it as a potentially stronger, sort of a bull flag type setup. Trying to just get the higher expectations on your side is the way some traders would look at this. In addition, if we come back over here, what we'd want to say is, okay, so you can see over here, we have that kind of general setup here, don't we? Higher high, higher low over here that we anticipate, right? But what about the next key step right here, the start of the move? Because we would prefer, all else equal, to try to buy low and try to sell high. Well, if we're buying low, we're buying towards the end. I mean, price over here, right? Prices over here. Prices are coming down. It becomes cheaper, relatively speaking, as prices consolidate. So we're trying to get in as close as we can here. So this area right here becomes incredibly important for us to kind of analyze and to see, uh, is it kind of showing like it's ready to get going here? So let's go through some of these steps right now. And the first thing I'm going to do is incorporate another, yet a shorter term moving average to sort of highlight this right now for us. So one thing that traders will look for at this phase right here is some price action on a shorter term basis. In other words, can we get above, let's say, for example, a shorter term moving average, one that's more defined towards the stronger upside moves. For example, let's pull it up. Here is, oh, there's that 10 period moving average. And by the way, I've got these already added in. If you're ever going to add one in, notice what I'm doing. I'm just clicking on the little dropper icon. Great, the quickest way in the world just to add an indicator. I already have this saved as a grid, but just type in, for example, simple or SIMP. It's right there, your simple moving average. There are a number of different moving averages. We're just keeping it really basic. And this is one that we use frequently in this class, simple moving average. But here is the 10. So I'm going to plot this right now. Let's just make it a little thicker. And here we go. So notice what's happening here is we might just be getting started to move it out of the base. Prices are trading greater than the 10-day moving average. How do we know that, folks? We just added it in right there. There it is. Do you see that? That helps us kind of get a sign or a signal. Now, is there time left in the trading day? Yeah, a little bit more than a half an hour. But you can clearly see over here, we are above it or we're testing very close to it. So this could be an initial start today, just even on this example trade of us sort of moving outside of this range right now. Okay. Down over here, let's do this too. You can see, were we above the 50? Right here, here it is. We were. Did we get above it? Right there. Do you see the break? Right there. And that was kind of a strong day, but you're looking for this. And I've got to tell you that looking back and trading in the markets for a couple of decades plus, you see a lot of price action. Just coming back to our chart over here. If I just throw on that 10, just like we saw it here, something like this breaking above, it happens fairly frequently. You might get below it and then you might start to get above it here. Okay. So what's happening is you tend to get a lot of price action. If you're looking for price moves, which constitute the swing trade, right? The swing trade time, the swing itself, a lot of it, not all of it, but a lot of it can happen above the 10-day moving average. Okay. So that can also be quite helpful there too. In other words, that's kind of a higher expectation, maybe, that the move could take place here. Now, we don't know if it will, but I did want to put on an example trade here. I'm kind of spending a little bit more time on these initial ones just to make sure that you guys are on the 1, 2, three simple steps for the swing trade, right? 50 period moving average, higher highs and higher lows clearly that we can designate. And lastly, the third one there is a shorter term move. Now, are there other ways to look at this? We have highlighted a number of different ways. In fact, we used a classic indicator from an old trader, really from the 1920s and 30s, who had an approach here. That also has some interesting indications. So we'll talk about that, and we have some of that too in our swing trade class that we've already addressed on the recording and the playlist. We have a swing trade playlist you can take a look at. Last week we went into the moving averages quite a bit, highlighted some stocks there. But there are other approaches. In fact, let me just hit one more before we transition into an example trade here. But there is something referred to as, and I think it may have been, something that we talked about in our group years and years ago, but there's an acronym for it. And that's just simply this: a close above the high of the low day, a K-hold. I used to call it a K-hold, and then I was abruptly corrected, and no, it's the K-hold. So I went with the K-hold. You won't find it in the dictionary, but that's how some people like to say it. So there you go, a K-hold. And what are you seeing over here? Let me show you this. This is fascinating. This is another way you can use the 10 period, or you can use it adjoined with it too. You don't just need to use one or the other. You can use multiple indications. But look at this pullback here. Let me show you. The low day. Okay, well, we've identified steps 1 and 2. Well, what about the 3? There is this additional approach. The low day. We know it's coming back. It's a higher low thus far. Let me point it out to you. Here's the low day. Did we close above the high of the low day here? Those of you that are just learning candlesticks, we did not. If it's a red bar over here, we closed lower. You see it right there? That's a close lower. We closed lower again. So that's a new low day here. Did we close above the high of the low? We did not. Here's a new low. Did we close above the high of the low day? We did not. Now, we've got a new low right here. Did we close above the high of the low day? I have to say this, not yet. We got about a half an hour, but we might. We might still. It's kind of moving into that range, right? We're kind of the close is the close, and that's in about 32 minutes or so. But that's something else we could look at. Where is the close above the high of the low day? Close, where would it be if it does in fact hit? Okay, there we go. Now we can kind of see it. Well, there's the low day. Where's the high of the low day? Folks, it's right there. And where are the closing prices as it stands right now? Well, it's above the 10-day, and here it stands right there. You know what makes this so unique? This is fascinating because I'm just going to dive into one little kind of just bonus explanation here. Even though, we've got some other things to hit for sure, let me just highlight this. I have set up over here in my grid charts, and we can talk about this more next week. We can't talk about all these details, but the 10-day, the 30, and the 5, just go to your 30, and it will show you something fascinating here. You know what's happening when you close above the high to low day in many cases? You are closing above your shorter term range. I'm trying to make that as straight as I can, around 80. There you go. But that might be an indication that even on a 30-minute chart on this delta, we're starting to actually kind of like, how a way to say it is it's becoming sort of like a rounded bottom. Do you see it? Maybe a mini cup and handle. We don't know. Sort of like a cup and handle pattern over here. But that's what can make these so unique. It's actually showing you something that's happening on a short-term basis. Okay. Let's readjust this here real quick, just so we have it, and then we can pull up a couple of things here. But I wanted to just kind of highlight that for you so you could see a few different things. Now, one thing too, I just want to pause real quick, folks. If you are getting value out of this class, yes, do us a favor, just smash that like button. It just lets us know, let Scott and I know that this presentation, you are finding value out of it, and it helps just kind of get the class out there. Also, be sure to subscribe to our Trader Talk channel. Love to have you on board here. Here is that class. I'll just send this into the chat real quick so I've got it here. So Trader Talks, and Scott might have already sent this through, but just in case, we've got it right there. And there you've got it. There's your Trader Talks link. Just subscribe. If you're not already subscribed, you'll just be able to do that right over here. A lot of great information here. In fact, under playlists, you can come down here and take a look at our class. By the way, this is a great class that Scott teaches himself right over here. Very, very knowledgeable and a great instructing approach to stock investing for beginners. So be sure to check that out as well. Fill you in on the basics. It's always so important to have that structure behind what we're doing here. A class like that is designed specifically for that. We've got this class over here, swing trading. This is the one we teach each and every week. Scott has already posted that in the chat. Thank you very much for that, Scott. I'm going to go ahead and put his in here as well, just so we've got it. But this is for the stock investing for beginners. Really, really good to fill in a lot of blanks as you're getting started with the beginners and get that in place. But there you go. That is the playlist for that as well. So park that in the back of your minds. But we'd love to have you on board. Folks, right there, look at that. 200,000 subscribers. Great to have you on board. I think many of you are, but if not, definitely consider giving us a follow. Like the presentation as well. Okay. Well, let's get back to our discussion here. So a few different ways to look at it. And by the way, Chris said, yeah, probably Jesse Livermore. Chris, and you are correct, sir. That was one of those that we were looking at. Just a classic investor. We looked at a lot of different scenarios, but that was one as well. He's looking for higher closes, higher lows on that move. You might get that on the next day or so if it was one of those approaches that we discussed in this class. But yeah, we've looked at a few, and many of you have other indicators you like to look at as well. I'm just going to throw one out just as an example over here. See this over here? Sometimes when the RSI, an indicator we tap into, if it's above 50, that can mean bullish relative to bearish as well. See, there I go. I can go on and on, but these are just simple kind of checks that you can have right on your chart to quickly, kind of help you assess where you might be. All right. Well, with this Delta here, that's Delta Airlines. Let's go over here and let's just put a sample trade on here. We're going to put our targets though up top, just based upon that bull flag that we just been looking at in that swing trade slide. So here is that first move. I'm really going to zoom in though. That just doesn't do us justice. In fact, what I'm going to do, let's clear out at least one of these moving averages just for now. We can keep the 10 in there, no problem, but just make it a little easier to take a look at. Okay, let's do this. I'm going to zoom in. I'm going to go into a 6-month chart so you can see it. Now, that's the first leg of the move. How do we measure that bull flag? I'm just going to right click on it. Great little function here right off the Thinkorswim platform. Duplicate that drawing. Just drag it over to the perceived low where you expect the low to be right there. Now, that's our target right around 95. What can be interesting, and this was discussed by a lot of different technicians, is if you get above 90-ish, sometimes you're just sucked up to a big number like 100. Who knows? Remember, the target is just the initial target. Sometimes after a bull flag, can that trend still continue to rise? Folks, it's higher highs and higher lows. It's expanding. So it could. In other words, yes. To answer the question, yes. So let's do this. So I'm going to put it around 90, just as an example. Let's just say 93 is the upper target. And for that potential exit that we explained in our disclosures, the stop, where would that stop be? The stop is going to be below today's low. So if we look at this, look at the potential reward risk, potential reward and potential risk on a trade like this. If we get in, let's say right here, our risk to the downside, I'll put that in red, might, depending upon where we get filled on that stop. I mean, they do compete with other existing market orders once they are triggered. So they try to fill as like a market order would. But like down in here, like in this range, that would be the possible risk based on that stop, potential risk. But look at the upside. Just highlight that in yellow. Reward to potential risk. Do you guys like that? That's one of the things you'll get with these flag patterns, right? And just in general, if they do unfold, it gives you at least a projection. So risk over here in red, potential risk to potential reward. A lot of traders like that. There's a lot of these little, I mean, you could say over here, if that's your risk, you could say, well, there's a 1, 2, 3, 4, and maybe even 5. It could be something like a 5 to 1 or 4 to 1 reward to risk ratio, potential risk, potential reward. So with that, let's put that trade on and I'll show you how it's done. Now, I'm just going to use a round lot, 100 shares, just to make it simple for us over here. I'm going to right click over here on the ask. I'm going to buy custom with an OCO bracket order. Let's flip these to good till cancel over here so that those targets could be hit at that level. I mentioned a 93 up top. I don't know exactly what that number was off the bottom, but I'm going to show you how to adjust this on the chart, which is an awesome tool. I'm going to put 75. It wasn't quite that low, but I'm going to highlight this here. Okay. Just to double check, we are at just 100 shares, example. If that's too high and it's paper money example, you could just go to 50 if you want to do a paper trade that way. Let's just take a look at our dialog box to confirm where we're at. And I'm going to go ahead and just click on send. Okay. See if we can get a fill on that. Now, notice I did put that other stop a little bit. I'm going to resume that. Sorry. A little bit lower. I'm just going to drag and drop that even before that order fills just below that low level. There you have it. See, we could do it right on the chart. There it goes. And there's the fill. And there's our target to the upside. And there is our potential stop exit to the downside. I put it just a little bit below there, but you could adjust this too if you wanted to up a little higher towards our target. Click on send. All right. So there you go. You guys got it. That is how we set these up. Now, there is a survey link in the chat as well. If you're able to click on that, that'd be fantastic. It lets me know, it lets my manager know, who happens to be Scott right here, how we're doing in terms of any questions. There's only any comments you might have, but there are only 2 questions, and there's a section in there for comments. And we do take topic requests there as well. We'll definitely try to incorporate any topic requests into future discussions so that we have that feedback loop there for you. But yeah, if you're able to click on that, that would be terrific. Now, having said that, let's go ahead and take a look at another set of stocks that we can take a peek at here, and I'll show them to you. We'll stick with a 6-month chart. Now, a little bit different. This is Network Appliance that had this really, really big move to the upside here. Technology, right? We saw a little bit of a bounce back in the market. We'll see how the market finishes off today, but that is a massive gap up to the upside. And you can see it was really tied into an earnings announcement. Now, sometimes traders will look to trade outside of earnings. So you can watch this on the chart to see if an earnings, notice we have a little bit of space over here. So that 3 to 15 days on the swing trade time frame, we could easily be looking out in the future and seeing if there are earnings. Now, in this case, we just passed earnings and it was up kind of big. But does it qualify? I'll put our 50 back on again, just so we can have that as a reference. For a step 1, clearly above. And many of these, in these AI or technology, there's maybe some AI component here as well on Network Appliance, or NetApp for short, which is what they call it now. You know, check. Are we above the 10 yet? We are not. But could this be like a watch list stock? It could be. One thing I'm just going to highlight here that kind of caught my attention is this. When a gap, there are 3 different types of gaps out there, and one of those gaps is referred to as a measurement gap. A measurement gap is this. Price is coming up. You measure this price range right here from high to low, okay? And you take it from the gap and you measure that same distance, and it's probably about here. So on a measurement gap, we might have more room to run. Now, I'm throwing in maybe some more advanced concepts. We do slip those in this class as you guys are beginning to get more, more involved in more insight here. But do you see how that could also work in terms of a possible flag pattern here? Look at this. See, even if we were coming up over here, do you see the flag potential with something like the extension up to a measurement gap? Yes. So I'm just showing this one as an example to kind of keep a look at within technology. Now, here's another one, UAL. UAL, let's go 1 year. I'll show you the 1 year. A little different, but you can still see there is the possibility of this stock maybe getting ready to possibly test or even break above some highs over here. Now, this is a really interesting point I'm going to note, because some traders, not all traders, but some, and we'll talk about this. I didn't want to get too deep in the weeds in this class, but like in next week and future weeks, wanted to highlight on that flag pattern, there is a T1, a target one that is at the prior high of the move. And some traders will only seek for this move to the upside. And notice we've got a little bit of resistance over here, don't we? Maybe that's an area where it would hold stop. But if it were to break higher, there is the longer term flag pattern, which is the T2. It's the termination or the target two. See that up here? If I'm just kind of eyeballing this, do you see I'm going to kind of measure this same wave over here to the upside? Look at that. So maybe it's a little bit longer than just the prior high. So there can be a target one, and there can be a target two over here. We've been looking at the target two, but I'm just saying that yeah, this one is interesting as well. Is it looking like with what? What do we have? We got less time in the day. We're down to about 19 minutes now, but we might be getting the hold here. And by the way, as we are approaching that upper resistance level, notice this. We're getting potentially a higher low. Sometimes when you get higher lows and higher lows, companies get close to breaking that resistance. They're just kind of inching up, inching up, inching up before they try to test it again. So here's one that's showing a potential kind of a scenario setup over here. Coming over here, just a couple more because we're just about out of time, but I want to show you guys. Here's another. So ADM, higher highs and higher lows, not above the 10-period moving average. We were slightly above the 10-period average moving average yesterday, but another one that could be possibly setting up for a longer. Do you see the flag? There's actually a smaller flag within the bigger flag here, but I'm actually referring to this move right here. And I realize this would take us out more into that 1 month, past 15 days to more bars. Maybe 15 bars, maybe 20 bars. This is kind of a longer one. Now, some traders might just elect to take a shorter term move to a T1 target. Actually, this already hit the T1, but it could hit it again. But they might also look for this too. I'm just trying to expand your horizon. Sometimes you can look a little bit longer out, depending upon the stock. Certain ones just have a different tendency to move. I'm going to throw out one more just to show you this so you can see it. Right. Oop, ROST. There you go. Longer move. And this is much more, maybe shorter term too. You're very, very, very close to getting above the 10 period. If you're there, bouncing along the 50 into new highs as well. Folks, we could get a lot of companies popping up. So be very, very mindful if that boom in AI starts to unfold, because we have a lot of companies here. Let's say, for example, in the NASDAQ 100, or even in we could say the Magnificent Seven, Apple. Oh, that's not it. AAPL. Okay, pulled back a little bit, coming back down to some support. We can be watching these for signs of this trend continuing on up. How about Google? Okay, see what I mean? We've come down a little bit. This is a swing trade that we did just fairly recent. It's a little bit longer, but remember the T1 target would fit within that swing trade time frame. Sometimes, and how many actual bars is this? So that's a lot of bars. That's 29. This is closer to your 20 bars right here. I don't want to get too far outside of the swing trade time frame, but I'm just letting you know you might start to see some swing trades activity even on the longer term setups as well. One more that had been pulling back. Notice a few of the Magnificent Sevens have been. There you go. All right, a little bit lower. In fact, this is below the 50. So this has to do a little bit on Amazon, a little bit more movement for sure to get us moving in the right direction. Folks, smash that like button if you found this informative and helpful. It's been great being here with you today. Again, be sure to subscribe to our channel and always follow Scott and I on, oh, it went to this one. I had us kind of setting up on X. Love to have you on board where we do post financially related content in different discussions as well. This is when I was looking at just over some other stocks, but we do post other sorts of indications here as well. So Scott Thompson CS, and here is mine right there, Mike Fairborn CS. Give us a follow there, folks, if you are in fact interested. But it is good. It's been good to be with you as we did talk today about a simple three-step approach to swing trading just to get us seeing more indications. And there could be more on the horizon, depending upon what we get in the market on this recent pullback. But on that, thank you so much, Scott, for your help as always. You guys have a great rest of the day. And remember, there is that survey link in the chat. On that, we'll see you next time, everybody. Have a great day.